Everyone, hope everyone are doing good. So today I am here with one more concept, partnership and LLP accounts. Okay, this is under the CA Foundation chapter 10 where we need to study about partnership and the LLP and its accounting. Okay, firstly we'll study about the introduction to partnership accounts, like what is partnership, what is LLP, the basics of partnership, and how do we do accounting under partnership and also under LLP. Okay, so just to understand, first of all, what is a partnership? A partnership is like an association of two or more persons. That means one person cannot carry on a partnership. There must be at least two persons or more than two persons to carry on a partnership business. And what do they do in the partnership businesses? They'll do the business, and whatever the profits out of the business, they will share the profits and losses of the business, right? It can be under the profit sharing ratio, or if no profit sharing ratio has been mentioned, then we will go distribute it equally. Profits and losses of the business are shared equally. Now there should be an existence for the business. These persons, like two or more persons as an association, coming together, pooling their financials, like pooling their capitals into the business, and they'll run a business, and that business should be legal business. Okay, for a lawful business they have to carry on this business activities, to run the activities lawfully, like legally, which should be accepted in the eyes of law. And there should be an agreement between people, agreement between partners, I mean. So that agreement entered into by all persons concerned. So that agreement which is entered in between all the partners and among the partnership firm, that has to be abide, like all the partners has to abide with the rules and whatever written in the agreement. Okay, next is the business carried on by all or any of them acting for all. So here under the partnership business, the business is carried on by any one of them acting for all, or all of the people together participating in the partnership business. One of the most important feature of partnership business is the liability of partners is unlimited. That is, in case there is a loss to the partnership firm, or at the time of winding up of the partnership firm, if the partnership firm is into losses and it is not able to pay off its liabilities, then at that time the partner's personal property will also be considered to pay off the debts of the partnership firm. So this is the only drawback we can say, or major drawback we can say, under the partnership business, that the liability of partners is unlimited. Now coming to the accounts of the partnership firm. So what do we prepare, as in like the books of accounts under the partnership firm is, firstly we'll prepare the trading and profit and loss account and the balance sheet. The one like the final accounts that we prepare for even a sole trader organization, same like kind of we will prepare a trading and P&L account and the balance sheet for partnership firm as well. Next, we'll also prepare profit and loss appropriation account. We'll see in the further pages like what is P&L appropriation account also. And also we prepare capital accounts of partners. And capital accounts of partners, we do have two methods. How do we prepare capital accounts? One is fixed capital method or fluctuating capital method. Now going forward in the next pages, like we will learn all these methods, like fixed capital method, under which like how the capitals have to be represented, and under fluctuating capital method, how the capital is like represented. Okay, now let's start with the introduction. Why do we have many types of organizations, that people come together and form an organization and run the business, but why only partnership business is the question. So the answer for that could be, see, an individual as a sole proprietor, he can run the business, but there can be a situation where he may not be able to cope up with all the financial and managerial demands. Like financial demand, nothing but like the capital base to run the business. Of course there will be need of a capital in huge number. So that capital, being an individual person, may or may not be in a position to cope up with. So at that time, and also during the managerial decisions, like to take decision with respect to anything in the business that single person may not be able to take up properly. So in that position, what is like, to just overcome that limitation, we do have one more kind of organization, nothing but a partnership business. That means people come together, like two or more people come together and run the business and share the profits equally or in the profit sharing ratio, and each of the partners acting for all or all the partners participating it. So in the present day world, there can be a situation where an individual person may not carry on the business properly, like he may not have the exact, like how much ever the sufficient capital that he needed with him. So it's like an advantage for him if he goes with the partnership firm rather than doing individually as a sole proprietor. Now as a result, so there is a concept called two or more individuals decided to pool their financial and also non-financial resources. So financial resources, nothing but we will pool like our capital, that is the money base into the business to carry on the business. But here under non-financial resources, we can have things like the support or the skill or the knowledge of each and every partner it is used to run the business, and what strategies has to be applied in the business. All these come under the non-financial resources, and these are used to carry on what, the business. Yeah, so that's it. Now coming to the definition and what are the features of a partnership firm is, the definition is given under the section 4 of the Partnership Act 1932. So what does it says, what does the section 4 says is, partnership is the relation between persons who have agreed to share the profit of a business carried on by all or any of them acting for all. Now understand, partnership is what? It's just a relationship between people, like persons, like there could be two or more, it cannot be one anytime. And what they did, they have agreed to share the profits of the business which has to be carried on by everyone or any one of them acting for everyone. That means that every partner can participate or any of them can participate for everyone, like for all. That means on behalf of everyone, only a single person can also run the business. Here comes a concept like active partner and sleeping partner. So sleeping partner is who? The one who contributes to the capital and also he shares his views also, but he will not actively take part in the business. So he is called as a sleeping partner. So there can be people like sleeping partners also, but they will also get the share in the business, but the business is carried on by only the active partners, right? Now going to the features of a partnership firm. What are called as features? That means any business organization to be said this is a partnership organization, what features have to be lied, what features to be there under that organization to call it as a partnership business. First thing is there should be an agreement. So as per section 5 of the Indian Partnership Act 1932, it says that the relation of the partnership arises from the contract. That means there should be a contract between the parties. Who are parties here? The partners itself. So there should be a contract between the parties and not from the status as it happens in case of a HUF. Now you know what is HUF here? HUF is nothing but a Hindu undivided family. That means it's a family business carried on or run by the only the family members, right? But here under the Partnership Act, under the partnership business, there is no such restriction or a prohibition that only family members can run the business. It is that any of them, like anyone like any friend or relative of yours, like any person, it doesn't depend on any relation or status between them, anyone can start the business of partnership. Now, what is the agreement here? Agreement can be in the form of formal or a written agreement, but it is that it is not necessary to create a partnership. So here we are saying, of course, there should be an existence of agreement, but it is also said that it is not mandatory to have an agreement. That means orally also they can speak on something and they can carry on the business. It's not that a written or a formal agreement has to be made and registered. So remember this most important point, there cannot be an agreement which is in the written or formal form, but even then we call it as a partnership business. Now coming to the next feature, what should be there? There should be carrying on a business. That means a partnership can exist only in business. It is not the agreement alone which creates a partnership. That means it comes into existence only when the partners begin to carry on a business which is in accordance with the agreement. So what does section 2b of the Indian Partnership Act says here is the business includes every trade, occupation and profession. So what does section 2 says in the of Indian Partnership Act says here is business can be, it can be any trade, that means trading in goods or services like buying and selling goods or services like that, or occupation, or any kind of profession. Like we as pursuing CA foundation, once we become chartered accountants, it's like we can also do for our profession, like for our profession we can also run a partnership firm, like partners coming together like CAs being becoming a partner and can run the business. So what can be type of business? Any type of business, but it includes also every trade or occupation and any profession also. Now coming to the other feature, that is sharing of profit. That means here we understood that in the second feature that partnership business can be made. I mean partnership organization can be established only for the purpose of doing business, right? Now we are doing business only to make profits. It is other thing that there can be losses also, but the main motto of any business person is to make profits, right? The persons concerned here must agree to share the profits. Okay, that means who are the persons concerned here? The partners itself. So they must agree to share the profits of the business. That means like we understood, right? Like there will be a profit sharing ratio between among all the partners. The share in the profit, they can be distributed among all the partners in that ratio if it is given. If it is not given, then we'll go with equality, because no person is a partner unless he or she has the right to share the profits of the business. If there is any partner who is not been given a share in the profits of the business, we will not call him as a partner only. Okay, he can be an employer or a manager or something else, but not a partner. A partner is the one in the partnership firm who gets the share in the business, like in the form of profit, or in case of losses also he has to bear the losses. Now what does section 4 of the Indian Partnership Act says is does not insist upon sharing of losses. So here the definition also says that, here you can see the definition also says that the partnership is like to have agreed to share the profits of the business. That means section 4 is not talking anywhere with regard to the losses. Got it? It will not insist upon sharing any losses among the partners. It's upon the partners how they are sharing the losses. But coming to the profits, everyone has to get some share in the profits. Now a provision for sharing of losses is also not necessary. So as per the provisions of Partnership Act, what as we understand is even to create a provision for the losses is also not mandatory. Now coming to the next feature, mutual agency. What is mutual agency is, it means that the business is to be carried on by all or any of them acting for all. I just told you, right? There will be a person called or a partner called sleeping partner who will actually contribute to the business, and also he will have a share in the profits of the business, but he will not come to the business or the office premises every day and participating in all the decisions. So there can be people who are acting for everyone. That means the active partner working for everyone, participating in everything, but there can also be a people like who will not involve in all the day-to-day activities of the business, right? So here if you can see, the person carrying the business acts not only for himself but also for others, that they stand in the position of principal and also the agent. They are called as the partners. That means they act for themselves and also for the others. Coming to the next feature, that means what happens in case a partner is a minor. Minor as a partner. So if a minor is added in the partnership firm as a partner, the condition is that he can be admitted to share profits only. Now so far what we understood is that all the partners will have share in the profits. Of course section 4 does not insist upon like sharing of losses, but everyone has to take part in the losses also. But there is one condition for the minor. If he is a partner in the partnership firm, he will be admitted only to share the profits, not the losses. That means he cannot be made to share losses of the firm. That means the firm suffers losses, that it will be borne by other major partners in their PSR, but not the minor. Minor will not share any losses. He can be a partner, but he cannot share any losses. Losses cannot be shared to minor. Now coming to the next feature, how many number of people, like so far, like we are saying every time that there should be at least 2 persons to carry on the business of partnership firm. So it is that the minimum partners that we require is 2. Now the maximum partners, how many number of partners can be like run the business of partnership is. So Partnership Act never speak about the maximum number of partners that can be running the business of partnership, but here we'll just take the reference from the section 44 of the Companies Act 2013, that it says no association or partnership should consist of more than 100 number of persons or as may be prescribed for the purpose of carrying on the business. So here what is prescribed under the rule 10 of Companies Incorporation Rules 2014 is the limit can be maximum of 50. As per the Companies Act, it is saying it is 100, but the rule as prescribed says that the limit can be only 50 number of people. That means any association, it cannot exceed the number of people or number of partners in the firm as 50. So in the partnership firm also, we should consider the maximum number of members in a partnership firm should be 50 only, not more than 50.